It's been a while since we've done an update video on Tesla stock, and given that it's currently down over 35% from its highs at the time of this recording, I think it's time to address the question, is now the time to buy Tesla stock? And to do this, I'm going to update you guys on everything that's going on with the stock and the company, and I'm also going to do it through the lens of both the bearish viewpoint as well as the bullish one. And of course, I'll give you my own view and argument on Tesla stock as well. That's coming from someone who has pretty much always been pretty bullish on Tesla stock. It's currently my second largest stock in my entire portfolio, but I promise to be as unbiased as possible, and that should make for a very fun and interesting video. So I hope you guys enjoy it, but with all that said, let's get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. Alright, let's start by just pulling up the stock chart. We'll examine why the stock has been crashing, and we'll run through some bearish and bullish arguments, and I'll be sharing my own thoughts as we run through those as well. Alright, so taking a look at the stock, we can see that they are still technically up by around 1,500% over the past 5 years, and it's actually up by even more if you bought it on some of the bigger crashes and dips. It's just hard to see on this chart because it kind of smooths it out over a longer period of time. But either way, this is obviously a gigantic increase in price. However, if you look at the end of the chart there, you'll notice that there's a pretty big fall from the top, and if we zoom into that, we'll see that it's a crash of over 35%, which is also very significant. So why did this happen? Well, for one thing, it actually tracks pretty closely to the tech-heavy NASDAQ, which Tesla is also listed on, by the way, and you can see there that over the past 6 months, the NASDAQ has fallen by over 20%, which is not only at the very bottom of its 52-week range, but it's also considered a technical bear market. And there's several reasons for the broader market struggling right now. In fact, I'll direct you to one of my most recent videos called Should You Buy Stocks Now or Wait for 2022 Market Crash, where I give a broader view of everything going on if you want to learn more about how inflation and interest rates and the global health issue and the Russia-Ukraine conflict, how all of that is really weighing down on our economy, or at least threatening it in various ways. But the reason why I show you the NASDAQ here is because when the broader market is falling like this, certain individual stocks can get hammered even worse. Case in point, the NASDAQ is an index of many different stocks, so it's more diversified, and that results in it falling by a lower amount. But Tesla on its own as an individual stock just took a lot of damage for being a highly valued tech stock that was probably overextended and thus needed to correct back down by a large amount as the broader market and economy struggles. The question is though, is more than a 35% drop or crash, is that warranted for Tesla? Well, I'm personally kind of 50-50 on it, but let's examine the different arguments because there is some good ones from both sides. Starting with the bearish view on Tesla though, one of the scariest issues for a highly valued growth stock that is in desperate need for consistent growth to justify the valuation, well, the last thing you want to see is a stagnant or even declining economy if you're in that position. But right now, inflation is so bad that interest rates are expected to climb, with Morgan Stanley predicting as many as 7 rate hikes just this year alone to cool down the economy and slow down our record-breaking inflation. The result will be a slowing down economy that will force people to borrow and spend less money, especially on high-priced luxury vehicles like a Tesla. Meanwhile, Tesla's valuation was already sitting at a gigantic PE ratio of almost 1,400 just about a year ago. The thing is though, is that Tesla is growing very fast. That trailing PE ratio has already fallen all the way down to the 160 range, which gets cut by around half going forward as well to just the 70 range. But even here, you're still talking about a much higher valuation than not only the sector at just 11, but also competitors like GM and Ford at 6 and 8 each, and even higher than some giant tech companies like Meta, Apple, Netflix, and Amazon. In fact, at its current price, analysts don't expect Tesla to reach a lower valuation than even Netflix until 2026, when it's expected to finally break into the 20s range. Again, we're going based off of PE ratios here. And all the meanwhile, Tesla as a company themselves have been facing several hurdles just to make things even worse. First of all, delays have been plaguing Tesla for some time. You had the Cybertruck delayed until next year, which was previously expected this year. And that's a very disruptive vehicle because of its aesthetics, the functionality, and the truck-like design that would help them tap into a brand new market for Tesla. But speaking of new markets, one of the most important markets that they absolutely need to break into for long-term success is the mass market consumer market, which Tesla has been planning to develop a much cheaper $25,000 car for and was planned to release in 2023. But unfortunately, during their last earnings call, Elon Musk told investors that Tesla is too busy with other projects right now to make time for the low-cost electric vehicle, saying that they are, quote, not currently working on the $25,000 car, which is a shame. Again, I think they really need that car for long-term success, but the key words are long-term. As long as they start working on it soon, they may still be able to get it out to the market within a couple years, which wouldn't be so bad. The bearish argument, though, is that these delays from Tesla will give their competitors an opportunity to release new EVs and possibly steal the spotlight in the meantime. For example, Ford is still on track to release their electric F-150 this year, which is a direct competitor to Tesla's Cybertruck and is likely going to sell extremely well, since the F-150 brand is already the best-selling truck in the world. On top of that, Ford is also planning to triple their production of their electric Mustang by next year. I'm just showing you Ford as one example, but the point is to illustrate how a competitor could potentially use this gap to their advantage. Now, we do still have a couple more bearish arguments to run through, but I'm going to start treating everything from here as a more bullish viewpoint because I'm going to give some pretty good counter arguments for each of these bearish ones. So for example, you could argue that Tesla is also facing supply constraints from chips and batteries. In fact, when addressing the Cybertruck and the $25,000 car delays, Elon Musk specifically called out the worldwide chip shortage that we've been experiencing, saying that even if they had introduced a new vehicle, their deliveries would be the same because they don't have enough chips to produce more vehicles. However, the reason I don't really consider this a big enough reason to be bearish on the stock is because practically all of their competitors are experiencing the same issue, which is not only temporary, but Tesla has still been experiencing fantastic growth despite it. And I'll show you that growth in just a second, but the same thing can't really be said about their competitors. And then there's the issue of battery supply and certain materials that EVs need. Notably, you know, that whole Russia-Ukraine situation that we're going through? Well, nickel is a raw material that is needed for batteries, and it's heavily mined in Russia. As a result, Morgan Stanley estimates that the price of EVs will rise by $1,000 to offset the supply constraints because of that conflict. But Tesla may be better positioned than most to handle many of these issues. First of all, EVs in general are going to benefit from the record-breaking rise in gas prices. For example, in California, it's estimated that a Ford F-150 costs $140 to fill the tank, and even a Honda Accord still costs a monstrous $75 as well. But a Tesla Model Y only costs $19 to charge, and this could cause a boom in EV purchases as consumers may look at all of this stuff that's going on and think that right now is a good time to finally consider transitioning over to an electric vehicle. Now, granted, EVs tend to cost a lot more than ICE vehicles, but nevertheless, it may just give that final push that hesitant consumers might need in order to transition over. On top of that, though, Morgan Stanley notes that Tesla has been securing more supply and manufacturing capacity than many of their competitors, which will help them obtain more batteries. In fact, it was recently reported that Panasonic will begin producing new batteries for Tesla that will offer some of the longest ranges ever, with at the very least a 15% boost to previous versions. And just the other day, Reuters reported that Panasonic will also be constructing a new massive battery plant in the United States just to supply Tesla with more batteries. And while Tesla was initially suffering expansion delays and several hurdles overseas in Europe with their German Gigafactory, new progress is now being made after they received their final approval for the factory just a few days ago, with production capacity to start at around 500,000 vehicles per year. That's a huge deal because not only is Tesla doing extremely well in China after building the Chinese Gigafactory, where they have now grown their Chinese sales to almost half of their US sales. And by the way, that growth will likely continue since China EV sales skyrocketed by over 150% last year, making China the world's largest EV market at over half of the entire market. But then you also have Europe there as a whole in second place with nearly 3 times the market share of the US. So once Tesla starts tapping into that market too, you're just going to have even more growth adding on top of what they're already doing. Speaking of which, last quarter, Tesla broke records on deliveries for a single quarter, with sales soaring by 65% and even more for the full year at over 70%, which they also expect to see an average growth rate for deliveries at above 50% for their multi-year horizon as well. Meanwhile, analysts expect that growth to slow down to around 50% this year and an even smaller 23% the year after in revenue, which, don't get me wrong, when you consider all the supply constraints from the global health issue as well as global conflict and the macroeconomy, it's definitely possible that their growth will slow down by that much. But at the same time, those lower estimates leave some pretty decent room for surprise to the upside, especially if they're able to get their new factories in Texas and Europe pumping cars out very soon, including the new Cybertruck. But you look at this chart here that shows Tesla's growth compared to its competitors, and Tesla's just experiencing so much of it already at a time when legacy players are struggling to see much of any growth at all. Some have actually even been in decline. And it's not just sales that are soaring for Tesla. Perhaps even more impressive is how their profits are starting to catch on fire. And I say that, of course, in a good way. I mean, just check out some of these numbers here for the 2021 year. Operating income grew by 227%. Their operating margin nearly doubled. Adjusted EBITDA grew by 100%. GAAP net income grew by 665%. That's insane. Non-GAAP net income also grew by 211%. Operating cash flow grew by 93%, and even free cash flow grew by 80%. Those are monstrous numbers, and it's proving that they can be very profitable. In fact, Elon Musk specifically pointed to the fact that their operating margin in the last quarter was even higher than their competitors who primarily sell ICE vehicles, which he feels that it shows how EVs can actually be just as profitable, if not even more profitable, than their ICE counterparts. Again, the bearish argument against Tesla is always going to be that they are too expensive compared to other traditional automakers. And that's absolutely true. That's probably always going to be the case. But you're paying a premium price tag for what Tesla can grow into over the long term. And it doesn't just stop at cars. You're talking autonomous driving, think of the robotaxi service. You're talking energy, solar and battery storage, transportation, like their partnership with the Boring Company, logistics, you've got the Tesla Semi, even robotics. Tesla's even working on an actual kind of humanoid robot. And then you add on the cheaper mass market vehicle, and all the meanwhile, they'll continue to sell autonomous driving as a service, either through an upfront cost or as a subscription. And they'll continue to make a lot of money from that with software-like margins. It's just a very compelling story when you look at the entire Tesla picture. I personally think that the stock is worth it long term, but it's already my second largest position. So I probably won't be adding to it unless the stock was to fall, say, like 50%. Then I would be willing to add even more to my already very large position. But for people that are not already in the stock, I don't think that it's a bad purchase. If I was not in the stock already myself, I would actually buy some here. I would just do it in a small amount so that I can make sure that I can double down, triple down, or even quadruple down if the stock was to struggle more and fall a lot heavier. So that way I have a clear conscience. I don't have to worry about it. I'm kind of stress free because I know that I still have enough funds to lower my cost basis if the stock falls. And that strategy is totally fine as long as I believe in the company long term, which I happen to do so myself. I do believe in the company long term. I think the mistake that a lot of people tend to make with Tesla stock is that rather than buying it when it's at low prices, they tend to buy it when it's at higher prices. And this is a stock that is very volatile that, in my opinion, should always be purchased on dips, not when it's climbing sky high. But the issue is that Tesla tends to be a very hype type of stock. It's a stock that tends to generate a lot of attention when it's making some big moves. And so when the stock takes off, I see a lot of retail investors or traders look at it and they're scared of missing the boat. They see the stock climbing by a gigantic amount and they think that they just need to jump in, that the stock is just always going to climb. But that is not the case. It's a very volatile stock. So it has some big upswings, but it also has some huge downswings as well. And what happens is they buy in when the stock is climbing and it's very high, and they buy in by very large amounts. Instead of buying in small amounts and being more conservative with it, they buy in very large amounts because they don't want to miss the boat, right? So they just jump in with a ton of money. They go in very heavy into Tesla stock, and then the stock struggles because it's volatile and it plunges by a huge amount. And because they went in so heavy, they see themselves losing a giant amount of money as it continues to crash. Tesla stock crashes a lot all the time. It also soars a lot all the time. But like I said, it's very volatile. So they'll see it crashing. They see that their value is going down by huge amounts because they went in so heavy, and they start to panic. And they don't know what to do because in many cases, they didn't even really believe in the company super long term. They just went into it because of all the hype surrounding it. So they panic and they sell on the crash and they end up losing a ton of money. And then they blame Tesla stock for it, and then they never want to jump back into it. I think a lot of people make that mistake, and if they would just be a little more conservative with it, buy it in smaller amounts and focus on buying on the dips rather than when it's sky high, I think a lot of people would actually be a lot more successful with Tesla stock. And that's what I've done myself, and I'm actually up over like 1700% on my position. I'm up a huge amount on my position, and I do own it in my E-Trade account and my M1 Finance account as well. I'm not up by such large amounts in those accounts, but my largest one in my Robinhood account is up by like over 1700%, and that's because I bought it so low, and anytime it would crash and it would have the biggest plunges, that's when I would add more to it. And it worked out very well for me. And I think if a lot of people just kind of copied that strategy, I think they'd have a lot more success. So anyway, those are my thoughts from where we stand right now. I hope I made sense, but thank you for stopping by and for watching the video. I gave you some bearish arguments, some bullish arguments, and I gave you my own take on it all as well. I hope you did enjoy that. If you did, please consider hitting the like button. It really means a lot to me. And let me know down below what you think about Tesla stock. Are you buying it? Is it a stock that you just stay away from? I'd love to hear your thoughts, and I will try to respond to those comments as well. But thank you so much for stopping by. I will catch you guys in the next one. Hope you're all doing well. Take care. Bye-bye.